Let's move on with the rest of the program. Saudi-based Islamic Development Bank planning to launch 2 funds focused on Africa and Asia next year. The bank aims to raise a combined $1 billion to help fill a gap in infrastructure investment among its member countries. The plans from the IDB, the largest development organization in the Muslim world, follows the launch of a $500 million tech-focused funds in April of this year. The Vice President of the Partnership Development, Mohammed Nourijuni, believes the new funds would help close a deficit investment for projects such as transportation, energy and sanitation across the 2 regions. Meantime, Copperbelt Energy Corporation has sold 50% of its equity in CEC Liquid Telecom to Liquid Telecommunication Holdings Limited. CEC is Zambia's main supplier of power for the mines, and Liquid Telecom were equal partners in the joint business since 2011. Now, the power firm did not disclose the amount those shares were sold for or why it had decided to dispose of those investments. However, the CEC says it would continue to be involved with the telecoms firm as an infrastructure provider. Okay, so we've got the Nigeria's closing bell in about less than an hour from now, but the earnings making some strong headlines as we speak. Within the last 2 hours, we've heard from Lafarge Africa, Nigeria's second largest cement maker, reporting a very disappointing 9 months report for the year. The first 9 months of the year, reporting 10.3 billion naira loss on a revenue of just less than 4%. This is one of the earnings on the street this day. Let's get a bit of a more sense of this earnings seasons coming through right now. Victor Chiazo is joining us from the Stock Exchange trading floor. He is the head of research and investment at FSL Securities. Victor, it's good to have you on the program. Let's get this started with the numbers. Track Lafarge's very disappointing numbers. Since 2016, 2 straight years, this company has been making losses.
Yeah, you're right, Boston. Lafarge has actually been dishing out unimpressive numbers since 2016, and the truth is, going forward, I don't expect that trend to change, except they tidy up their act and get their gearing ratio to a level that profitability will be possible.
What do you think, as a research analyst? I'm sure you've seen these numbers over the last 1 year, 2 years in your line of business of doing research and investment. What is the key problem here with Lafarge? Is it just debt, or the company just find it difficult to compete in this market with its main rival, Dangote Cement?
Yeah, I think Dangote Cement competition is quite tough, but the truth is Lafarge has actually found it hard in terms of making profit since their consolidation with Unicem, Ashaka and Atlas Limited. I think after that consolidation, it looked like they actually bit more than they could actually chew, because since then we've seen that the debt burden for the company has actually significantly risen over the couple of years, and since then their finance cost has continued to surge. After the acquisition of Unicem, we all know what happened in the economy. There was a devaluation of the naira that actually pushed their cost burden to a level where their income could not actually manage that particular repayment. So for Lafarge, I think despite the fact that they've tried to actually weather the storm by raising capital in terms of the rights issue they did last year, we noticed that income was not actually enough, and they've actually told themselves that, okay, we're going to be coming back to the market to raise more funds. But the truth is, coming back to the market to raise funds at this time might not actually be that might actually be the best move. But for investors, I think investors might not be actually willing to put in their money because they've not gotten any form of return from the last one they did last year, at which the right was actually placed at 42 naira 50 kobo. Currently, Lafarge is trading at 21 naira. For me, if I bought that right issue for now, I'm looking at a loss of almost 100%. So for me, going forward, they actually need to come to the market, tell us their strategy, and let investors decide.
So, as some analysts are forecasting, looking at a full year, some profit measure for Lafarge Africa, fourth quarter is said to be the season when cement sales seem to get a lot more stronger in terms of folks trying to buy and things like that. Government is spending more money on infrastructure and other. Do you see Lafarge likely ending the year on the positive side, no matter how little that could be?
Yes, there's a possibility for the company to end the year on a positive note, but for me, I still think their numbers will come in negative, because even if you look at currently that for 9 months, that loss of about 14 billion for profit before tax against about a 1 billion profit before tax previously. So for me, even the 9 months result for 2017 will have come in at a loss if they didn't record the extraordinary income which arose from the sale of their elephant house, which brought in an income of about 2.4 billion into their income statement for last year. But for this year, 9 months, at a 14 billion loss and profit before tax and a 10 billion loss profit after tax, I think going into the full year, they might find it pretty hard to actually come in with a decent number.
Okay, so UBA, let's shift gear here and move on to the banking sector, where UBA is flagging off the current earnings season with the numbers ending today. What's your take on these numbers for this Tier 1 lender?
Yes, UBA came in with a number. It wasn't as impressive as most analysts would have expected them to actually turn in. The result almost came in flat. Revenue was up about 12%, and profit after tax was up about 1%. More or less, earnings were actually flat. What worries me for the Tier 1 banks, especially for the Tier 1 space, is that most of these banks, after the party that saw the banking space raking a lot of money from their trading income and FS income, which we saw in 2015, 2016, 2017, most of these banks have not been able to actually improve income from their core business, which is actually interest income. If you look at the entire financial statement, you find that most of the banks, about 80 to 90% of the banks, are not lending, and that is actually worrisome for that sector. If a bank doesn't lend, most of them are cautious on lending. How do you expect interest income to grow? It seems to me like the banks are just sitting at the back of their horses and saying, okay, we're going to wait for yields to actually increase. We're going to wait for revaluation gains in terms of the FX market for us to post profit. And for me, that might not happen anytime soon. And if that doesn't happen, it looks like we're not going to be seeing any significant surge in terms of profit for the Tier 1 banks.
Early days yet for the earnings season. Thank you very much. We'll touch on other areas some other time. Thank you very much for showing up today. The trading floor, the Nigerian Stock Exchange for us. Victor Chiazo, who is the head of research and investments at FSL Securities. Let's finish off the oil market, where prices are extending gains into a fourth session today. Buoyed, as it were, with those stories around the global marketplace. Industry data showing a surprise decline in U.S. crude inventories. U.S. West Texas Intermediate was up 15 cents at $72.07 a barrel. Brent crude, which is a benchmark, was up 12 cents at $81.53 a barrel after settling a bit 63 cents higher before at the last session that was. The global benchmark crude, which hit more than a 2-week low last week, as equity markets drop, is now trading. It's been trading $5 below a 4-year high of 86.74, which was the highest on October the 3rd. That's a wrap for today. Thank you very much. I'll see you again.